Sup guys, Over here, and in this video we're going to be talking about Huobi flash crash and yet another US bank potentially going down. The last 24 hours have been really bearish for the crypto market, with more bad news and concerns about regulations. On average, coins went down 5 to 7%. However, if you check the biggest losers for 24 hours, you see Huobi, and something really weird happens, like this flash crash. For example, this is the chart of Huobi Token on Gate.io, and this is the chart of Huobi Token on KuCoin, and this is 1 minute chart, so the whole thing happened in few minutes. And on different exchanges, the price, the low point of the price was around from like 90 cents to like $1.20, all the way from 4.5 bucks. So we can say that Huobi token went down approximately 80% in the matter of minutes. So what the hell happened? And it seems like the main cause of that was not enough liquidity, which is weird because this crypto dump of the last 24 hours, it's not that big. So it raised some concerns about the stability of not only Huobi token but Huobi Exchange, because token sort of represents the exchange. Justin Sun tweeted, "We deeply apologize for the impact of the leveraged liquidation on the market caused by a few users. In order to further improve the multi-currency liquidation of Huobi platform, we will set up a liquidity fund with an investment of $100 million US." And then later it was reported that the transfer was completed and $100 million in USDC were transferred for liquidity fund for Huobi. And Justin Sun also tweeted that the operation of Huobi Global Exchange is #safe, the wallets are safe and backend is safe. The recent market fluctuations and the leveraged liquidations were caused by a few users, triggering a cascade forced liquidations in the spot and HT contract markets. And that definitely raises more concerns, because like if few users can do that, what do you have bigger dump? And tweets like that everything is safe, I mean, they probably do comfort some people and calm down some people, but we've seen it before. We've seen it with FTX, we've seen it with Celsius. Like, there are a bunch of examples like where right before the collapse, the officials saying, "Oh, everything is safe, don't worry." And on top of that, we have another bank that's potentially collapsing, that's Silicon Valley Bank. TechCrunch reported a lot of facts on the story, and it seems of now the trading on the SVB stock has been halted. We can see in the graph here, and the employees were asked to work from home until the bank decided what to do with it. So what happened according to TechCrunch? Silicon Valley Bank lost $1.8 billion in the sales of US treasuries and mortgage-backed securities that it had invested in, owing to rising interest rates. The bank is also contending with shrinking customers' deposits, given that its customer base of largely startups has far less money right now to park at a financial institution. Because it's in the spot, it decided to raise a bunch of money to safeguard its business. The plan was to sell 1.25 billion of its common stock to investors, 500 million in convertible preferred shares, and 500 million of its common stock in separate transactions to a private equity firm, General Atlantic. The apparent goal was to project that the bank was being conservative and raising this money to stabilize itself. However, the timing of this announcement is really bad, since the Silvergate Bank just announced it's winding down its operations. And on top of that, they issued the press release that was really badly received, and that triggered a bank run of the customers to withdraw their money. And there were also reports that they have issues withdrawing the money. So all in all, the bank is like in really bad shape. And the last report is saying that they potentially seeking a buyer and deciding what to do next. Crypto markets are also in bad shape, but we're gonna explore that in another video. For now, thank you for watching, and I'll see you next time.